Hi, hello friends. Welcome everyone to Option Omega, India's largest retail options traders online conference. I'm Ashok Devanampriya, the CEO of Traders Gurukul and also the host for your today's program. It's a great pleasure to invite every one of you to the third edition of this beautiful options learning series. Before we kick off the presentation, I would like to thank our media partner Money Control Pro, the largest financial portal in India with millions of daily readership on their website. I would also like to appreciate our title sponsor Espresso from the family of Sher Khan, one of the leading stockbrokers in India with millions of investors as their customers. Finally, I would like to thank our platform sponsor Rigi, a platform for creators, influencers and celebrities to grow, manage and monetize their community. The speaker for today is Mr. Murali Deshpande from Pune. He is the founder of Murali Options Trading Academy, close to 11 years of experience in trading options, 5+ years of educating close to 1,000 students worldwide. His specialization is in options trading. Presently, he is a full-time professional trader focusing on index options for Indian and US markets. He has his own proprietary trend finding method. He is a conservative and a risk-averse trader who believes in defined risk market neutral strategies. He is going to empower us today with a special topic, expiry day strategies in Nifty and Bank Nifty. Murliji, on behalf of Traders Gurukul, Money Control Pro, Espresso, and Rigi, I extend my warm welcome into this program as a speaker. Thank you, sir. Go ahead, and the stage is yours.
Thanks, Mr. Ashok. Thanks for giving this opportunity. I welcome you all for this today's expiry day strategy in Nifty and Bank Nifty. What happened? So, thanks to our title sponsor Espresso, a Sher Khan company. Thanks to our platform sponsor Rigi. So, about myself, I'm very much thankful for Ashok giving a grand welcome and a grand introduction about myself. He has already talked about myself. So this is important notice, no representation is being made that the use of this strategy or any system or trading methodology will generate profits. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading securities and options on equities. Only risk capital should be used to trade trading future and options is not suitable for everyone. Mota is not responsible, any Mota and Traders Gurukul, both are not responsible for any losses made from or any profit made from this webinar. So today's agenda is trading versus gambling. Which one is, we'll go through that. Option terminology, some basics of options because some attendees must be new to the options. And some introduction about short straddles, what is short straddle, short guts, how our strategy should be. If I'm using a selling strategy, how it should be. And I will be explaining expiry day trading rules, position sizing, risk management, and after that, following with those question and answers. So, is trading a gambling? I don't want to debate this, but even if it is, some people may say that it is a gambling. Some people may say that it is not a gambling, it is science, it is art, something like that. I don't want to debate that, but even if it is a gambling, there is one person who makes money in gambling, that is owner of the casino. Why? The reason behind that is he makes most of the odds in his favor. One reason. Second is he follow the rules. So even if you consider this as a gambling, but if you follow the rules and if you make most of the odds, if we make most of the odds in our favor, we can be successful in this. So this is one study from Brazilian market, which says that I don't want to demotivate, but I want to present the facts also. How we can be in 1% of this group in the top of the pyramid. Okay, all traders start with the dream to get rich quick. So this is the aim of all the traders who come into the trading system. Then 40% of the trade only for 1 month. So rest will be out of this trading system again. So every month new traders will be coming. 80% quit within the first 2 years, quite a long period, I can say 2 years, and only 7% remain after 5 years. Even though it is the Brazilian study, but it applies to all over the world. All over the world, same thing happens most of the places. Brazilian market is also one of the leading markets, leading stock trading market, I can say. And they say that only 1% of the total traders, they beat the FD rate. They earn more than what FD bank interests are giving. Okay. Even in India also, many of the brokers, the leading broker who has got biggest retail network in his kitty, he also said that only 3%, okay, only 3% of his traders beat the FD rate, bank FD rate. But okay, again, I am saying I am not demotivating with this. We can motivate with this how we can be in our 3% or 1%, whatever may be. Okay, the only requires to be in 1% or 3% is follow the rules. Very, very important. Whatever rules, your strategy should be rule based. Whatever rules you find out, and it should be rule based. If you follow rules without any deviation, 100% follow the rule. If you follow the rules, you will be in those 1% traders who can beat the FD rate. So following the rule is very, very important. Okay, with this, I would like to go through some option terminologies. Many of you must be aware of those, but for new people, just glimpses of what is in the money, what is at the money, and what is out of the money, I would like to introduce. So at the money strikes, when the spot price is taken, the strikes nearest to the spot price is called at the money strikes. At the money strikes have no intrinsic value or the very little intrinsic value if it is just above or below the strike price with respect to the call option or put option. So at the money, for example, if Nifty is trading at 16,625, so the nearest to the spot price is at the money, that is 16,600 at the money call option, and 16,600 is also at the money put option. Now, what is in the money strikes? The strikes which have both intrinsic value and time value or the extrinsic values are called as in the money. At the money strikes, they don't have intrinsic value, or if call option has intrinsic value, then put option will not have intrinsic value. But as far as in the money is concerned, yes, in the money will have intrinsic value as well as extrinsic value. Extrinsic value has two components. Again, one is time value and volatility value. So in the money, as far as call options are concerned, all the strikes smaller than the spot price are called as in the money call options. Vice versa, smaller than the strike price are called as out of the money put options. Spot price greater than the price are called as in the money put options. Vice versa, spot price, the strike price which are greater than the spot price are called as out of the money, out of the money call options. Similarly, out of the money strikes which are away from the current price and having only time value. So these out of the money strikes have only time value or the risk premium, which normally is the seller's demand. Okay, those are called as out of the money strikes. Strikes which are away from the current price and having only time value or the extrinsic value are called as out of the money strike price. So this is as per the option chain. If you are making algo formulas, algo trading system, it is normally, if it is Bank Nifty, it is ATM minus 100 is called as ITM call option. Some websites, they prefer to maintain like this, ATM minus 100, and some of them, they even look like this, ATM minus 1 is called as in the money call option, whereas ATM minus 1 is called as out of the money put option. Vice versa, ATM plus 1 is in the money put option, and ATM plus 1, ATM plus 2, ATM plus 3, etc. are called as out of the money call option. Similarly, ATM plus 50, ATM plus 100, ATM plus 150, etc. are called as out of the money call options. Surprisingly, on 25th July, we were at 26,630, sorry, 16,630. Okay. So moneyness, concept that refers to the potential profit or loss from the exercise of the option. An option may be in the money, out of the money, or at the money. So any strike which may be in the money or out of the money or at the money. In the money, which has got intrinsic value, that is the actual value of the option, plus it also has got extrinsic money. In the money options, it has got extrinsic value also. So in the money, that is the actual value of the option plus the extrinsic value, whereas out of the money it has only extrinsic value. At the money they have little bit of intrinsic value plus extrinsic value. Most of the time it is referred as at the money they don't have any intrinsic value. ATM nearest strike price to the spot price. The similar way, ITM C, ATM minus 50 ATM or minus 100 ATM or minus 200 ATM and so on. In the money put option, ATM plus 50, ATM plus 100, ATM plus 300, or ATM plus 1, ATM plus 2, ATM plus 3, and so on. Out of the money call option, that is ATM plus 50, ATM plus 100, ATM plus 200, ATM plus 300, and so on. Whereas out of the money put option, ATM minus 50, ATM minus 100, ATM minus 300, and so on. Or it can be also considered as ATM minus 1, ATM minus 2, ATM minus 3, and so on. Okay, we are selecting weekly options for trading expiry day strategy, because every week you are getting an opportunity to trade. Okay, instead of trading monthly contracts, we are trading weekly, because every week you are getting an opportunity to trade. One thing. Second is the theta decay is the highest on the expiry day. The highest theta decay is on the expiry day. So we are selecting expiry. Today I am going to talk about expiry day trading. Weekly options are more liquid, okay, than monthly options, and more popular. No doubt monthly options are also liquid, but weeklies are more liquid as compared to the monthly. As I told, the theta decay is highest. One of the, okay, even if you are trading straddles or even or if you are trading guts, one of the option is going to become zero. Okay, that is the advantage with weekly options, that is expiry day trading. So if you are using 2 lakh rupees, you are getting 4 opportunity to trade in a month rather than going for the monthly expiry. So option sellers can make decent money by using risk defined option strategies. So all strategies are risk defined, and as there are 4 weekly expiry in a month, so return on capital will be higher than just trading 1 monthly expiry. So that's why we are trading with weekly expiry. Bank Nifty, Nifty, both the indices are one of the most liquid indices in the world, and Bank Nifty is more volatile. If it is more volatile, it can give more return or more loss. Okay, both the chances are there, but since strategy itself is good, which has got a very good win ratio, so you can you can make more money with combination of Nifty and Bank Nifty. So why weekly option? As I explained, theta decay is highly exponential on expiry day. It is highly exponential on expiry day, so that's why weekly options. This theta decay is shown with respect to the at the money strikes. Any payoff chart, theta decay shows only for the at the money strike. Okay, the theta decay shown. This theta decay is with respect to the at the money. This is monthly expiry, where you can lose only this much. Monthly expiry can give only this much, whereas the weekly expiry on every week will give the last day of this, the expiry day. The theta decay is highly exponential. That's why every week weekly expiry trades are more beneficial than trading monthly expiry. I'm giving an example of the ice cube. Larger the ice cube, slower is the melting rate. Smaller the ice cube, faster is the melting rate. Similarly, very near to the expiry, theta decay is very fast. No doubt advantage, disadvantage will be there the disadvantage, the gamma risk will be very high in on expiry day. But since our strategy has got defined risk, so no worries of the gamma also. So theta, I am looking into the theta eating theta on expiry day. So theta loss to the option buyer is higher near to the expiry or on the expiry day. The seller gains more near to the expiry as time is very less. So that's why we are using weekly expiry. So we execute our weekly expiry strategy on every week Thursday. Every Thursday. We are selecting which underlying to trade. We are selecting both Nifty and Bank. The strategy is of Nifty and Bank Nifty both. The results, backtested results, are combination of both. Why you can trade individually? I'm not saying that you cannot trade individually, but how results are beneficial if I trade combined. That's what I'm going to say now. So we will be selecting weekly expiry strategies for indices like Nifty 50 and Bank Nifty. Now there is a Fin Nifty is also there, Financial Nifty, but the liquidity with Financial Nifty is very poor. That's why we are not selecting Financial Nifty. Financial Nifty has got a expiry on every Tuesday, whereas Nifty 50 and Bank Nifty both are getting expired on every Thursday. Since strategy itself is combined of Nifty 50 and Bank Nifty, so it is one day you are trading only one day both. So Fin Nifty is entirely separate. The liquidity is the biggest question with Fin Nifty, so we are not preferred Financial Nifty. Okay, which strategy? That means how my strategy should be. If I am trading a selling strategy, how it should be. A strategy should have a win ratio greater than or equal to 60% or 65%, more than that. So a strategy, the strategy which I am selecting, if it is a selling strategy, if it is a buying strategy, I can say even 40% with a good risk reward is okay. But if I am selling strategy, it should have a minimum of 60% win ratio. That means if I am trading 100 days, it should give minimum 60 days winning trades. Okay, a reward to risk ratio should be greater than 1. Reward should be greater than 1. So that means if I am losing 1 rupee, I should gain more than 1 rupee. That is what this sentence says. Then only your recovery will be very fast. Maximum drawdown. Okay, drawdown here I am considered as 10%. So it should be below 10%. It should be below 10%. Drawdown, I hope you know the drawdown. What is drawdown? Suppose you have started with the capital of 10 lakh rupees. It has reached to the, say, approximately 13 lakh. And from 13 lakh, it drops down to around 12 lakh. So from the difference between 13 lakh and 12 lakh, that is 1 lakh, calculate the percentage on 13 lakh. So that is the maximum drawdown. And again, it should go above 13 lakh. So then only that is considered as the drawdown. Okay, so the this maximum drawdown at any given point should not be more than 10%. And the expectancy ratio is nothing but reward to risk ratio multiplied by win ratio minus loss ratio. That means how fast your loss drawdown is recovered. That is what the expectancy ratio says, which should be more than 0.3. That is 3 times. Okay. So whereas our expiry ratio is more than 1.3 almost. More than 5, sorry. And the average day profit from the strategy should be at least 500 to 600 rupees from one lot. Okay, one lot of Nifty, one lot of Bank Nifty, both put together, it should be around 600 to 1000 rupees somewhere. Nifty will give a lesser profit as compared to Bank Nifty. As I told earlier, Bank Nifty has got more volatility, so it gives more profit. Whereas Nifty is lesser, has less volatility, so it gives lesser profit compared to 500 rupees. Okay, if I am trading a strategy, a number of losing months should not be more than 3 months, 3 consecutive months, I mean to say, more than 3 consecutive months. So it should be less than 3 consecutive months, rather than I can say it should not be more than 2 consecutive, it should at the most 2 consecutive months, not more than that. And the real expectation, it is still higher side, 25 to 36% per year. Okay, 25%, 18 to 25%. That is the good reward as I mentioned in the earlier itself, only 1% of the people traders, they beat the FD rate. So FD rate in India, if you consider it is 5 to 6% now, so even if it's beating that, that is better than that. But the strategy which I am giving, that gives more than 25%, that is for sure. So your strategy should be, which should fit into this. If it fits into these rules, then only you should trade this strategy. Otherwise, you should not trade this strategy. We'll see whether the strategy which I am presenting today, does it fit into this? We'll see that. So first of all, for strategy should have a 60% win ratio. Risk to reward should be greater than, reward should be greater than 1. Maximum drawdown should not be more than 10% of your total capital or total capital used. Expectancy ratio should be greater than 0.3. The average day profit somewhere between 500 to 600. Number of losing months should be less than 3 months or not more than 2 months, and the real expectations of 25 to 36%. So now we will be understanding what is short straddle. However, we will not be trading short straddle on expiry day, but just for the information to understand short guts, you should know what is the short straddle, how it works, and if short straddle works, short guts should also work. So that's why I'm explaining short straddle. Short straddle works well in a range bound, but can have an unlimited loss if rules are not followed. Short straddle works well in range bound market, and it has been observed that 70% of the time indices are in the range bound. It is a fact. Worldwide indices behave like that. Research has shown that 65% of the time traders make money by selling short guts or short straddles. Straddle means at the money call option and at the money put option. Short means you are selling straddle basically. So selling straddle at a particular time. Option writers make money. This strategy is overall profitable with 3 to 4% return on investment per month. Okay, if I trade every day, but expiry day, okay, short straddle, it is a market neutral strategy where we are not aware about the direction but expect range bound movement from the current prices and selling at the money options. However, we are not trading short straddles on expiry day, but just for the information, what is the short straddle we should know? It is selling at the money call option and at the money put option. So how we make profit if I'm trading short straddle with a defined risk, that means I will be putting a stop loss for call option and put option after selling straddles. So if it starts going up, my stop loss for call option will trigger and I will be making a profit from the put option. If indices starts going down, then I will make a loss in put option and I will make a profit from limited loss from the put option, and I will make profit from call option. If it stays in the very range bound, I will be making profit from both the direction, that is both the call option and put option. So this also will be giving a profit. The only direction which can give you a loss is W shape or V shape recoveries in a day itself, since it is intraday strategy. So in a day itself, if it goes down very fast and if it comes very fast, again going down and again coming up, so whipsaw's big zigzag moves in one day itself, that will give a loss. That means out of 4 directions in the market, only one direction will give you a loss. So 75%, again, you are making odds in your favor. So 75% of the direction you are making in your favor. So only 25% you may lose, that is if there is a W shape recoveries. So what is short guts now? Okay, many people, they call it as a guts. Guts are nothing but in the money call options. Some people they call it as a inverted strangles, and some people they call it as a guts. So short guts in Nifty and Bank Nifty will be trading on expiry day only this short guts. So if it is Nifty, ATM minus 50 CE and ATM plus 50 CE, ATM plus 50 is PE, that is called a short guts. So both are in the money. If Nifty is at 16,550, example, if short gut is then 16,500 ATM minus 50 CE and 16,600 P, so we will be shorting both these. Okay, so if I trade short guts, it looks like strangles, but these are not strangles. These are you can call it as a inverted strangles. Okay, So the payoff chart looks like strangle, and if it stays in the range bound, if it stays in if indices days in the entire day, if indices stays in a very narrow range, then you will be making money. If indices goes one side, you will be losing this side call side, and you will be making a profit from put side. This is put, whereas this is call. And if indices goes down, then you will be making loss from limited loss from put side, and you will be making profit from call side. As far as Bank Nifty is concerned, ATM minus 100C and it is called as in the money option, and ATM plus 100P again is called as in the money put option. So suppose Bank Nifty is 36,000, so short gut strikes are 35,900C and 36,100P. So these are the gut strikes. If I am selling both these, then this is called a short cuts in Bank Nifty, and this is called a short cuts in Nifty. I will be taking the trade on every expiry day. First trade to be taken on expiry day for that weekly expiry contracts. If it is expiry day Thursday, so for that week only. So next coming expiry is 4th of August. So I will be taking 4th of August expiry only. The first trade to be taken in Nifty Bank, that is Bank Nifty. First trade to be taken between 9:20 a.m. to 9:30 a.m. Short guts. Suppose Bank Nifty is trading at between 9:20 to 9:21, between 29,951 to 30,050. So sell 29,900 CE and 30,100 PE at 9:21 a.m. So this is called as selling guts or short guts. Second trade to be taken on expiry day for that weekly expiry contract. Second trade to be taken in Nifty. First trade I am taking at 9:21 of Bank Nifty shortcuts, spot price minus 100 and spot price plus 100. Whereas second trade I am taking in Nifty. Second trade to be taken in Nifty trade to be taken between 9:29 a.m. to 9:30 a.m. This is short guts. So Nifty is trading at 9:29 to 9:30 a.m. between 16,525 to 16,574. Then the nearest strike is 16,550. So that is the ATM. So I am selling here ATM minus 50, that is 16,500 call option and 16,600 put option at 9:30 a.m. So this is called as selling short guts or short guts in Nifty. Third trade to be taken on expiry day for that weekly expiry contract. Third trade to be taken in Bank Nifty trade to be taken between 10:04 a.m. to 10:05 a.m. That is again a short guts. Suppose Bank Nifty is trading at 10:04 to 10:05 a.m. between 30,025 to 30,074. Sell 29,900 C and 31,100 PE. Again, spot price minus 100 and plus 100. So selling guts or short guts. Fourth trade to be taken on expiry day for that weekly expiry contracts. Fourth trade to be taken at 10:14 a.m. to 10:15 a.m. That is for Nifty. Again, short guts. Suppose Nifty is trading at 16,675 to 16,724. The nearest spot is 16,700. ATM minus 50 is 16,650 C and ATM plus 50P is 16,750P. So I will be selling at exactly at 10:15 a.m. selling short guts. Then fifth trade to be taken on expiry day for that weekly expiry contract at 11:04 a.m. or between 11:05 if trading at. So fifth is again Bank Nifty 30,025 to 30,074, sell 29,900 C and 31,100 P at 11:05 a.m. So again this is called as selling guts or short guts or inverted triangles. Then the sixth and the last trade to be taken at 11:15 a.m. that is in Nifty. Suppose Nifty is trading at 16,675 to 16,624, sell 16,650C and 16,750P, that is ATM minus 50 and ATM plus 50 CEP. respectively at, sorry, this is 11:15 shortcuts. So 6 trade has to be taken. Okay, this strategy is of 6 trades. The total capital required for this strategy is, I can say 11 lakh is 10 lakh is sufficient, 11 lakh is more than sufficient. Okay, if the IV is high, then you have to increase the capital, that comes to approximately 11 lakh, or reduce the number of lots. But since if you are considering one lot, it requires minimum of 11 lakh rupees if the IV is high. Okay, the question may come as why 6 strategies, why not? I will explain that also. But minimum capital required is 2 lakh. But the advantage, disadvantage with 6 trades and 2 lakh, again, when the question comes, I will explain that at that. So now comes money management and position sizing. Once the trade is executed, place a stop loss square of order of 70% of the executed price for Bank Nifty. Okay, 70% of the executed price for Bank Nifty, and 35 points or 30 points will give better benefits as compared to 35%. So 30 points for Nifty. And trade to be exited, you can say no need to exit if it is, since it is expiry day. You can keep it for auto square off if your broker allows auto square off free of cost, or you can square off on your own at around 321 or maybe 320. Since it is the expiry day, no need to take the intraday trades. You can take carry forward order itself. Carry forwarded orders will may require lesser margins as compared to the intraday strategies. Okay, that is my observation. That may be true or no, may not be, but that is my observation. Carry forward positions requires lesser margin as compared to the intraday. Okay, so trade to be exited at 321, or if it is becoming zero, you can keep it till 330, no issues. If it is becoming, or if both are in the money, expiring in the money itself by 321, 322, you come to know that, okay, this is not going to go above this or this, then keep it to expire on its own or own settlement, auto square off. Okay. Since these are just 100 points away, there is no fine also. Since it is indices, no need to worry about that. So you can keep it for auto square off. If you are putting 70% as the stop loss, only twice in a year, both the stop loss can hit, only twice in a year. Okay, so only maybe around 30 times in a year, that means 52 weeks, only 30 times in a year, both the only one stop loss hits. So that means quite a number of times both the stop loss doesn't trigger. Okay, so only twice both the stop loss may trigger, that is 70%. If you are risk averse, then you can keep, if your 70% stop loss triggers, you can keep other leg cost to cost. That much I can suggest, but I don't keep cost to cost. I follow the rules, this rule only. So this is the keeping position sizing. Okay, since if you have 10 lakh rupees, then I suggest you to go one lot. If you are having lesser than 10 lakh, then I suggest not to go for 11-15 trade. You can trade only 921's Bank Nifty, then 930 Nifty, 1015, 1005 Bank Nifty, and 1015 Bank Nifty. So this may require approximately 6 lakh rupees. If you have lesser than that, then you can go for Nifty and Bank Nifty combination. That is at 1015 Nifty and 921's Bank Nifty. You can select like that. But combining of all these 6 will give a better has got a better performance than what trading 1 or 2 lots with only 2 lakh or 4 lakh rupees. Okay, Nifty may require approximately anywhere between 1,10,000 to 1,25,000, depends on the implied volatility. Bank Nifty may require anywhere between 1.5 lakhs to 1.80. So both put together, you may require approximately 4 lakh rupees. Okay, plus another 10% or 20% you should keep it as a reserve fund. So 5 lakh rupees to trade 2 lots. 11 lakh rupees to trade 6 lakh, because your drawdown reduces if you trade more number of times in a day. So position sizing, okay, if you have more than 10 lakhs, I trade with approximately around 70 lakh, 80 lakh. So most of my amount goes with the position sizing like 920 trade and 1015 trade for the maximum. Okay, you can say more than 35%, 40% total goes into the first trade. Then 30% of the total capital goes to the first and second will fetch 40%, and third and fourth will take 35% or even 35%, very near to that, and 25% goes with 1105 and 1115 trade. How this position sizing I have made is the least drawdown, because most of the traders, they don't like losses. Okay, that is the everybody's aim. Okay, don't like losses, so lesser the loss, better it is always. So I prefer whichever has got a lesser drawdown, I distributed more capital to that. And now the winning ratio is almost everywhere it is same, but expectancy and the risk reward ratio, considering all this position sizing, I have 45%, 40%, 45% in the first two trade, that is 915 and 1015, whereas approximately another 30-35% goes to second trade, that is 1005 and 930 trade, and remaining 25 to 30%, 25% mainly 20-25% goes to 1105 and 1115 trade. This is how the money management and the distribution of funds. Okay, but minimum I suggest at least 2 different time frames. If you are not following 6 times, if you have lesser capital, distribute your funds in at least 2 different time frames. I can suggest if you have 4 to 5 lakh rupees, you can go for 921 bank nifty shortcuts and 1015 nifty shortcuts. If you have only 1.5 lakh, then I suggest go for 920. Sorry, if you have 2 lakh rupees, go for 921 bank nifty short straddle. But that has got a higher drawdown as compared to combining of all 6. That is the caution I would like to give, rather warning I would like to give. So you should keep around 20% as your a reserve fund for to trade, because if you lost with 10%, more than 10% of drawdown, then you will not be able to trade bank nifty. So this is the back tested result from 2019, the initiation of nifty. So combination of nifty and bank nifty expiry day, only expiry day trades, that means 52 trades in 1 year, and approximately 3 years, that means 153 and a half years, right? 19 February 2019 to till date. So does my strategy fits into all the rules? I should have a win ratio more than 60%, though my strategy has got a 63% win ratio, whereas the loss ratio is 37%. Maximum loss should be lesser than what the maximum profit is. Okay, so this is, although it is very near, but still maximum profit has got compared to the maximum loss. Average loss on loss days is much lesser than the average profit on win days. Okay, so I am gaining 5,000 rupees, whereas loss is on just 3,500 rupees. Sorry. Yeah, I have considered, as I told, 11 lakh rupees as my capital, so 42,000. Okay, so that comes to very less than even 5%, right? No. That comes to 3.81% as the drawdown, the least drawdown I can say in 3.5 years. Okay, so that drawdown was in the month of March 2020, March 2020. Maximum winning streaks are double than what the maximum losing streaks. Return to MDD ratio, one thing again I am looking at. If I am losing 1 rupee, I am gaining 2.21. As how my strategy should be, I was expecting that. How my strategy should be greater than, should be a risk reward of greater than 1, where this says if I am losing 1 rupee, my strategy is giving me 2 rupee 21 paise. And the expectancy, as I was expecting more than 0.3, whereas this is combining of all 6 strategies will give expectancy of 0.53. This is with the with the 35% of Nifty, stop loss of 35% for Nifty. If I keep 30 points stop loss, then the expectancy goes up to almost 0.9, and return to MDD ROCE goes up to more than 5, and the drawdown get reduced. Okay, so I normally follow with 30 points for Nifty. So this is combined of all strategy with how many number of days? 150 and another 25, 180 days, 180 trading days. Your 10 lakh has become 13 lakh 23,000 without CAGR, because this is only Thursday strategy, right? No, and you are getting very less returns over here. But if you put 30 point stop loss, this will be better as compared to the 30 point stop loss. So if you look at this 3,23,000 and the maximum drawdown, this is combining of all. Okay. If you look at if you trade individually, see, look at this. This has got a drawdown of 28,000, which is more than 10%. This has got only this one has got 28,000 rupees. So if I trade this one, so this has got a 20 more than 10% drawdown. Okay, so that is why it is always, you should not, otherwise also you should not keep all your eggs in one basket. Distribute your capital into the different time frames. So I suggest minimum, if you have a lesser capital of 4-5 lakh rupees, then you should distribute it to minimum of Nifty and Bank Nifty both at 921 and 1015. Okay, so but if you trade with 6, only 3.8% drawdown, that is the biggest advantage with this strategy. And return to MDD ratio, as it is mentioned, 2.21. The same one is kept in different manner, that's all. So average day profit, Bank Nifty will give more than 500. Nifty, if you keep 30 points stop loss, it will give more than 250 rupees. So which meets our parameter, what I mean to say. Our parameter, if you look at this, how my strategy should be. So our strategy has got 63% win ratio, fits into this. Reward to risk ratio should be greater than 1, fits into this. Maximum drawdown should be less than 10%, whereas our strategy is only 3.8% drawdown. Expectancy is greater than 0.3, whereas our even if I use 35% stop loss and for Nifty and 70% stop loss for Bank Nifty, it gives expectancy ratio of 0.53. Whereas if I use 30 point stop loss in Nifty, that gives more than 9.9. Average day profit is almost 500 rupees everywhere. Number of losing months, yes, that I will be showing, and the expectancy. So trading with only 180 days, 180 trading days or even less than a year, your 10 lakh is becoming 30, so 35%, 36% return. So this is month wise. My expectancy is that strategy should not should not have a loss of more than 2 months. So it is 2019 February. Only in the month in the year of 2021, 2 consecutive months. One is marginal loss of 164 rupees, and another one is 12,000 rupees. And as of now, this year, no straddle seller are making money in this strategy. Okay, for your information, those who are trading with 920, 990, 930, okay, with only one lot, or those who are trading with only one indices, either Nifty or Bank Nifty, they are not at all making money, for your information, in 2022 at least, from April onwards. Okay, I have the result for that also with only one strategy. Alternate month, these 3 months, that is March, April, May, all are in the loss, 3 consecutive months loss, then you should not trade the strategy. I mean to say, you should change the rules. Okay, I'm not saying that you should not trade the strategy, but you should change the rules so that it should not give a loss of more than 2 months. Just let me have a glass of water. So my strategy, as of now, you can say the total return and even 52,000 rupees is a good return in 6 months. So even if I consider on 10 lakh, more than a lakh rupees you can get. But if you use 30 point stop loss, this return will be approximately 1 lakh rupee in 6 months. That much change you have to do. And this is the cumulative profit graph. So which has given almost 3,23,000 rupees in 180 trading days. 180 trading days are lesser than what 1 year. In 1 year, we get approximately 250 trading, 250 to 260 trading days. So your return on investment will be more than 36% if you follow the rules. And this is the drawdown. So as I said, March, April 2020, the drawdown was big. After that, not a big drawdown. This was only the big drawdown. Even if I consider this drawdown also, that is just 3.8% drawdown, 3.8% of your total capital. So our strategy, expiry day strategy, which fits into the all our expected rules. This is what the expected rules followed all over the world. Okay. And normally professional trader follows the expected how our strategy should be. If it is a buying strategy, I can say even if you are winning 40 days in 100 days, 40%, and if you have a better risk reward like 5 times reward, then that is okay. But if you have a selling strategy, then it should have a minimum of 60% win ratio. That is must. So Ashok, with this, we can go for question and answer sessions, or over to Ashok.
Thank you very much, sir. Go to the next slide, please.
Yes, this is offer from me. I run for monthly, weekly, and daily income strategies. So whatever fees paid or 5,000, whichever is less, that much discount I can give for this. If you are registering for further webinars, this is only expiry day trade, but I trade intraday every day with different stop losses.
Next slide, please. Okay, so friends, as you all know, the official title sponsor of Option Omega is Espresso from the family of Sher Khan. For more details, log into myespresso.com. Next slide, please. So friends, one special feature about Espresso is that they do not charge brokerage for one leg of the loss making trades. They do not charge for one leg, which means whenever you make profit, they'll charge you. When you make loss, they don't charge you, which is something which is really meaningful from a trader's perspective. Okay, next slide, please. Okay, next slide. Sounds good. So friends, Binge is a desktop trading platform which comes from the family of Trade Tiger. Trade Tiger is one of the most successful trading platform which has been used by traders from the last 1 decade. So Binge comes with a web-based thought process, one of the very balanced, very matured, very agile, very sophisticated application that exists today. Go ahead. I am sure in the previous sessions you had a great explanation about the product. Please go ahead, check their website, and do not forget to open your account with Espresso and to claim the benefits of brokerage credits from the broker. Next slide, please. Next one. Yep. So friends, as you all know, Rigi is the platform sponsor of Option Omega. They are a platform for creators, influencers, trainers, and even celebrities to grow, manage, and monetize their community. Okay, one of the interesting platform which has come up to support a better collaboration and financial management with the community, students, and ecosystem partners. Next slide, please. Next slide. So friends, here is a quick update on status on the Amazon Fund of Trading Strategies, a company involved in 100% automated algo strategies for traders. So for more details, log into statuson.in. You can reach out to the relationship manager, and the company has successfully delivered about more than 15% profit in this financial year alone. Everything is 100% automated, foolproof, back-tested, validated, no curve fitting, no optimization, and a clear plug and play model. If you look at it in the last 5 months, the additional strategies that has been pumped, it is a strategy of strategies. That's why we call it as Stratazon. It is an Amazon of strategies. If you go and log into the website stratazon.in, look out for Chanakya Integrated Strategy 2.0, which is the signature strategy of the organization, which has a tremendous potential to generate a great money in the long term perspective. The vision is to grow money by about 10 times in the next 10 years. That is like a 26% compounding. Next slide, please. So friends, here is my special invitation to Traders Conclave 2022. This is a unique program which has been planned and designed by Traders Gurukul for the very first time. This is going to happen in Bengaluru in the month of September on 23rd, 24th, 25th in Hotel Hilton at Manyata Tech Park on the northern side of Bangalore, very close to the airport. This is not just a typical conference that most of the events do. This is an exclusive conference which comprises of three major phases. Phase 1 is learning. Phase 2 is Traders Championship. Out of 300 to 400 people that participate, this particular program is going to identify the top 3 guys to become the champions of the conclave, and another 7 people for the consolation awards. We are going to have Gurukul Premium League. It is called GPL. It's called as Gurukul Premium League. That competition is going to happen. And thirdly, about 100 mentors across India, inclusive of our today's mentor, Mr. Murali, will be participating in this program. You will get an opportunity to meet all the mentors in this program. Imagine the kind of vibration that it creates when so much of learning partners, so much of participant, with so much of event happening. It can be one of the best collaboration environment ever designed in India. This is my baby. I am exclusively designing this program. We have kept the pricing extremely low. There is no organization in India who can offer this kind of event at such a low price. It is not just a conclave of from 5 to 10 people coming and sharing some knowledge with you. No, it is a great competition. It can be the greatest alumni meet and get together of some of the brightest mentors in India. So do not forget to register for this event. We will all take care of you personally, and especially the lot of goodies that's coming in, and the complete investment you do, we want to give it back in the form of brokerage credit, which means you should never feel the cost. The cost is already low, and that cost is also we are returning. Feel free to shoot any questions you might have about this program. In the next maybe 5-10 minutes, we can spend time today. Fortunately, the event got concluded early. I would be more than happy to clarify any questions you guys might have about Traders Conclave. Okay, log into our website tradersconclave.com to know more about the program. Sir, next slide, please. So friend, there are a lot of people of varied backgrounds that are coming. You are going to learn about price, you are going to learn about time, you are going to learn about volume, you're going to learn about open interest, options, positional trading, intraday trading, expiry day trading, quant based algo trading. Okay, there's a lot of things that you're going to learn. Okay, and there is also one program called the 5-minute superstar. It is an experience of a trader which will be shared on. Most of the participants will be able to register their name and participate in that event. It can be one of the most beautiful learnings that you would ever have. Next slide, please. Okay, so an event of this magnitude with Premier League happening, so many mentors coming. Okay, you will stay in a 5-star property for 3 days with all the mentors in India coming up. Plus, you have 8 times meal covered. You'll participate in Gurukul Premium League, interaction with me. All these things coupled with valuable knowledge and best memories comes at a very, very aggressive price. Next slide, please. So, the early bird has already ended. We have sold more than 100 tickets now. We hardly have about 100 tickets to be sold. With we have 50 more days to go. The early bird price is still at 24,999. You guys can go and grab this price right now. All Option Omega participants, if required, talk to our conclave manager, Mr. Fazil. Please inquire with him. A question by Santosh is asking, can you provide more details on GPL? So GPL is a unique concept. We have built a mobile app. Okay, there shall be multiple quizzes and competitions that will be shot on a real-time basis to the people, and people have to answer. And in a real-time basis, the app will start displaying the top 10 superstars of the championship of the conclave. Okay, on a real-time basis, the numbers keep appending, people keep jumping up and down, and at the end of the day, whoever is at the top of the event, he will be the winner. And top 3 guys and their respective scores would be published, and on a time basis the results would be published on a TV. All right, and this event is also covered by CNBC. We have great sponsors joining us. We also have Bombay Stock Exchange joining us as a sponsor, because they have recognized the potential of this event. Okay, so this is going to be a different experience altogether for traders, and do not miss it. You should come and catch the glimpse of this event in real time to understand what we are offering for you on the program. Okay, a question by Vikas Jain: what is the minimum portfolio of the capital we should have to attend is zero? This is a knowledge session. This is a learning session. You don't have to hold anything. You have 25,000 in your pocket. Come down. That's it. Vikas, is that clear? And next question from Chintamani Ghosh. She's asking, where is it even happening? It is happening in Bangalore. People outside Bangalore, you need to book your flight tickets. People in Bangalore, you just have to drive down. That's it. Very close. It will be a very, very good experience to every one of you. All right. So do not hesitate to reach out to our team with more questions. Okay. And I look forward to host every one of you in this beautiful program that's coming up. So next slide, please. Here is the 11th quiz of the Option Omega series. As a rule of thumb, the deeper the dash your option is, the higher the delta. So pick up your answer: in the money, out of the money, A or B. Fastest finger first. Sir, next slide, please. Okay, the winner will get an opportunity to uh, join our Intrazon event coming up in November. All right, and also the man of the series will get educational goodies worth 1 lakh rupees. Next slide, please. And here is the winner for the 10th quiz. I think that's not 9th, my friend. It is 10th. The winner is Mr. Shamal Pad. If the market price is more than your strike price, your put option.
Sorry. No.
One more.
No. This one? No?
Yeah. No. If the market price is more than your strike price, your put option is in the money. Congratulations, Mr. Shamal Pad, for your success. We look forward to host you in Intrazon, and also we look forward for your participation in the Man of the Series event. We have one more event to go tomorrow. We will shoot the question and we will conclude the final winner of the Option Omega series. Thank you very much. So next slide, sir. All right, it is time for Q&A. Please go ahead, shoot your questions to Mr. Murali. Let us trouble him with some interesting questions. Sir, couple of minutes, people are busy answering.
No issues.
Okay, first question of the day from Vinod Mukude. Sir, can you please explain in brief about strategies today? Can you please go back and list down all the strategies on an Excel or a notepad?
Okay, no issues. You want it in Excel? No issues.
Yes, sir. If you can summarize in one single place, it will be really awesome, no?
Yes, no issues. So first trade 9:21 a.m. ATM minus 100 CE. And ATM plus 100 PE with 70% stop loss on both the legs. Second trade, that is at 9:30 a.m. ATM minus 50 and ATM minus 50 CE and ATM plus 50 PE. This is shortcuts. This is
Sir, can you please slightly zoom the view so that people can see it properly?
yeah. Why not? Is it okay now?
Yes, sir. Perfect.
Then this is 10:05. Okay. Then comes this is 10:15. Let's trade fourth. This is 11:05. Trade fifth. This is trade sixth. Okay, this is at 11:15 a.m. (11:15 a.m.). Okay, so I can mention here for Bank Nifty 70% stop loss, and for Nifty 30 points stop loss. Okay, for all the trades, and you'll be keeping both the legs stop loss. If one leg hits, other leg you will be keeping it till the close of the market. Yeah. Or else I will keep everything over here itself. I will not put trade 1, trade 2, trade 3. These are the trades itself. The best way. Yeah. So first trade 9:21, second trade 9:30, third trade 10:05, fourth trade 10:15, fifth trade 11:50, 11:05, fifth trade sixth trade is 11:15. And these are the stop losses. 30 points for Nifty and 70% for Bank Nifty. Yeah. Summarizing. Any other question?
Sounds good, sir. So 9:21 a.m. ATM 100 call, ATM target with 70%, ATM 50 and ATM 50p. So 10:05, 10:15, 11:05, 11:15. Ideally 6 trades.
Yeah.
Superb. Okay. A quick question by Mr. Yogesh, sir. Why only these specific times?
Okay. Since it is a expiry day, you get a maximum theta in the early morning itself. Times, okay, if you can select any time, you can take 9:30 trade Bank Nifty or 9:21 trade Nifty. Doesn't make much difference. But if you following one time this Thursday, then you should follow the same time for every Thursday. Then you will get a better results. But don't go beyond 12 o'clock because your theta will, you will be having a lesser theta in the guts. Then that will be in the money intrinsic value will be having. Then if you are trading beyond 12, 12:30, then it is better to go for short trades. Okay, these timings considering since guts will have a maximum theta before 11, 12 o'clock. Because half of the time is over, then we will not get that much theta in the guts. Guts have better results as compared to the short traders, that is sure.
Sounds good. A question by Mr. Neeraj Singh, sir, we have time. Can you please share one of your intraday strategy? No, Neeraj, let's finish up the question and answers for these strategies first. Okay. So, sir, a question by Vinod Mukde, sir, in this case, only buying or selling also? No, friend, it is
only
almost by selling.
Selling,
Vinod,
only
it is
selling.
not buying.
Buying strategy, no
Vinod
buying
got
strategy.
confused with that.
I will put over here as short guts. Short guts or sell inverted strangles. I hope you know strangles. Strangles are out of the money call option, out of the money put option, where inverted strangles are in the money call option, in the money put option. And sell or short is nothing but selling.
Sir, one quick question from Mr. Rahul Rungta. Sir, why have you put Bank Nifty 70% stop loss and Nifty at 30 point stop loss? What do you mean?
Okay, this has got a better least drawdown and higher percentage of win ratio. Bank Nifty has got a win ratio of 78%. Okay, Bank Nifty moves larger portion, larger units, larger points, I can say, as compared to the Nifty. That's why you put 70% and 30 points. If you look at the premium of Nifty, that also comes to very near to 70%. 30 points, I mean to say. See, normally on short guts, they trade at around 70-80 rupees. Okay, 30 points comes to very near to 40% at least. If you keep 70%, you don't get much profit in Nifty.
Understood.
I avoid 919, 920 trade because maximum traders are taking trade at 920. So it is better to go 921, 922. First trade.
Okay.
So slippage will be more at around 919, 920.
Sounds good.
Yeah. Any other?
Great. A question by Mr. Ramesh Nagappan. Yearly profit that you have shown before is for how many lots?
1 lot each. All trade 1 lot each. This is 1 lot of CE, 1 lot of PE, and which is true for all. Sorry, this is, yeah. I could have shown my profit and loss account itself, but that is combined of intraday and positional strategies.
Sounds good. Sir, what is the current capital you're trading, sir?
I am trading with 70 lakhs. Just a minute.
That's okay, sir. You don't. That's fine. We did not go there. No worries.
Okay. No worries. Okay.
Yeah.
So this is
one question.
This is one account. Just a minute. This is one account with 40 lakh. And the profit and loss will show you. This has started in the month of April itself. 7,21,000 rupees. April 2. This is 22-23.
Okay, that's almost 16-17%.
Okay, in 4 months, and we were not having any trades in the month of, because I started trading with 35 lakh in the month of April 20, that is 21-22. Okay, and
very good.
Increased to 70 lakh. This is one of the accounts. This is my wife's account.
Fantastic.
And this is my account. Today only the mandatory funds have come out. Otherwise, this is 40 lakh account again. 13 lakh has been withdrawn today because it is mandatory payout from the every 3 months the brokers pay out. Okay, and if I look at the profit and loss account, so this is 22-23, 4,37,000 rupees on 35 lakh rupees. So 35 has become now 40 lakh.
Okay, so one question by Mr. Deepak and Giridhar Gold. Once a leg hits stop loss,
okay,
should we have trailing stop loss for the other leg?
If you want to reduce further risk, yes, you can put the cost to cost. Okay. Other leg you can cost, but I don't reduce. I keep 70% till continued, because one leg stop loss hit for 40 times, other leg didn't hit for entire in 3 years. Almost 1 year, you can say out of 100 hits, only if one leg hits 40 times, other leg didn't hit the stop loss. So no need to keep the stop loss as such. No need to change the stop loss. No need to trail the stop loss. Both the leg stop loss hit in 5 years time, only 10 times in 5 years. Okay, that has been backtested 5 years bank test for with 70%. Both the stop loss hit. That means the call option also hits and the put option also hits the stop loss with 70%. That is only twice in a year. That also month also I will tell, that is in the month of March 920 trade and in the month of October. And June, that is 1005 trade. Most of the time it hits in the month of June and October. Okay, this is one more account. Last year we traded with this around 80 lakhs, 70 lakhs. This has given 31 lakh rupees profit. Okay, any other questions?
Sounds good. Let's proceed further. So, question by Mr. Anand Rao. Have you added slippages in your backtest?
Yes, 0.5% slippage has been added in Nifty and Bank Nifty both. Actually, the return from the backtest is lesser than what actually I am getting.
So, does it mean in expiry day you're only doing shorting, or you're also doing buying activity?
I do have buying strategies also, but I have a different account for that again. That kept, if I buy, see, even on expiry day, then the margin drastically will get reduced. So I do have buying strategies also.
Okay. Sounds
Buying
good.
strategies, yeah, buying strategies requires patience because the win ratios are very less. So you see most of the time losses, even though the small losses, but the losses are there. Okay. But whenever you get profit, that is the big profit you get in buying strategies. Don't go with the 40% win ratio. If you have heard the name Mr. Tiger Wood, a golf player, his win ratios are also only 40%. That means whenever he puts the ball in that golf hole, it is only 40 times out of 100 times when he tries. And the tiger itself, when he tries to get the prey, it gets only 40% of the time it is successful. Okay. So buying strategies I do have, but very less win ratio with 38 to 40%. But the risk reward is very big. Reward is very big as compared to the risk. So it is trader's mentality, whether you buy or whether you sell, doesn't make much difference. Only thing, you should follow the rules. That is important.
Absolutely. You make money, you do whatever nonsense you want.
Yes.
Even if you use rocket science, Ramanujan Mach theta function, partition theory, and if you don't make money, what is the point?
Fine. Very true.
See, ultimately, I always tell many people, so many people make a lot of money using simple moving averages. I say moving
Yeah.
average is great. No, the person who knows how to use that moving average, he is great.
Yes, right.
It is like, when Rohit Sharma hit a century, you tell, wow, Rohit Sharma did a wonderful job. It is not Rohit Sharma's bat, it is Rohit Sharma.
Yes.
Similarly, when
These
a
strategies.
strategy,
Yeah. Continue.
so similarly, when an indicator does something, why should the credit go to indicator? The credit should go to the trader who use that
Trader.
indicator.
I always say that it is not the strategy which is good or bad. It is the trader who is good or bad. No strategy is 100% perfect. No strategy. Okay. It is the you which you are going to trade. If you are going to follow the rules, you will be making money. Okay. This strategy is also not a holy grail strategy as such, but yes. But see, you should have a time, 5 minutes time at 9:21, only 2 minutes time. Another 2 minutes time at 9:30, 10:05. If you make this strategy with StratoZone, like algo, if they are ready to do the algo for this, then you can go for that. Then you need not to wait for these timings, as automatically these strategies will get executed. You don't require any time. Otherwise, also these strategies requires only 2 minutes time everywhere. It is around 12 minutes time you require, and after 11:17 you forget this. Whatever happens, no. At 3:20, 3:30 will come to know that you are in, whether you are in the profit or in the loss. But cumulatively, yes, you will be in a good profit.
Sounds good. One interesting question by Mr. Chauhan. Sir, how exactly guts affect the strategy compared to normal straddles? Does it reduce the drawdown or increases the profit? What exactly you're achieving?
First thing, it reduces the drawdown. Second is short straddles has lesser premium. Okay, and then if you put 70%, then you will get very less profit as compared to the guts. The percentage wise may be okay, but it has got rupee wise, this has better compared to the short straddles. Percentage wise also okay, win ratio is better and ROI is better in the guts as compared to the another reason for this is going for the short guts is okay, I am keeping my total amount same almost every day. Like short straddles, if I trade Friday, I trade short straddle, which is costing almost around 350 to 400 rupees, depends on the IV. And if I trade short guts, approximately 100 points, so that will be costing around 250 to 50 rupees, 500 rupees. So I increase, but I have increased the stop loss. So number of lots will be same almost, where here my risk for 350 maybe around 30-35% or maybe 25% stop loss, and here I am keeping 70% stop loss, but I am reducing the number of lots. That is what the position sizing is and the risk management is.
Sounds good. Superb. Sounds good, sir. I think you can probably think about moving to the last slide of the presentation. It was quite crisp and quite logical. One last question before we wind up from Deepak. What is the success of the strategy when VIX is around 25 or more on major event days?
Yes, the overall the Bank Nifty has been back tested for 5 years, and I am trading this strategy almost 3.5 years. So every day I am trading, no issues as such. The maximum drawdown itself is 3.8%. So even I haven't met with 3.8% loss in 3.5 years. So I have started normally when the Nifty came into with the weekly expiry. So my trade is of total 3 years with Nifty and Bank Nifty combining. So if you trade only Nifty, if you trade only Bank Nifty, Nifty has got higher drawdown as compared to the Bank Nifty. If you only trade Bank Nifty, yes, it has got almost around 10% drawdown with two trades in a day. And if you trade with only Nifty, the drawdown is almost around 15 to 17%. But if you trade combined, the drawdown comes down below 5%. I trade with a hedge, rather I can say. I trade with hedge means I buy out of the money options for increasing the number of lots. So I can suggest don't do that. Initially, you can do it without hedging. Go with regular one lot. Okay, 6 lots, 10 lakh is required. You make decent amount. Your 10 lakh can become approximately 13-14 lakh by end of the year. But do look at the consistent returns. Don't look at 1 or 2 days, 3 days, 4 days consecutive losses. Okay, look at how many months I am making profit. That is very important. So you will not have more than 3 months loss in a year. Because if strategy has behaved like this for 3.5 years, and 5 years for Bank Nifty, it has to behave in future also. but it requires patience. Okay, don't change the rules. Okay, since it is Thursday after 2:30, move may come, because all those points have been covered in the backtested results and my own experience of 3.5 years almost. So strictly follow the rules. Other leg you have to keep till 3:30 means 3:30.
Superb. Sir, let's move to the last slide, sir. All right, sounds good. With this, we come to the end of the session successfully. Mr. Murali, thanks for your insightful session. On behalf of all the participants of Option Omega 3.0, the Money Control Pro team, the Espresso team, the Rigi family, and all the family members of Traders Gurukul, we extend our sincere thanks for joining this event and sharing your knowledge to every one of us. Thank you very much once again, Murali sir.
Thank you, Mr. Ashok, for giving me an opportunity with Traders Gurukul and Money Control. And also thanks to all the participants who have attended this session. And I wish them very happy and profitable trading days ahead. If you have
And
any questions, you can, sorry, this is not my email ID as such. I will change it.
Okay, sounds good. So I look forward to host you in the month of September. All right.
Yeah,
So do come with your family.
sure.
So friends, that's the story for today. I hope you all enjoyed the session. I look forward to see you all tomorrow with the final and last session of the Option Omega series. Until then, signing off, Ashok Devanampriya from Traders Gurukul. Good night.
Thank you. Good night. Good night, Ashok.